Welcome to the Pump and Dump channel for another video update looking at the gold price. I think maybe some people are aware that the gold price is melting. It's going down. It's not looking good. I mean, the last 4 days it was just like a waterfall. It was just falling down, and I noticed that people are now looking for some confirmation bias that the position that they took in gold mining stocks or in gold itself were not wrong. Basically, the narrative is revolving around this decline is because of margin calls, because traders have to cover other positions elsewhere, so they sell their winners to double down on their losers, or they had to sell something to maintain their position elsewhere, and all this kind of blabber that kind of makes people feel that this is not normal and that it will go right back up again. And I don't know. I mean, this is possible it goes up, but I think of it in terms of a logical perspective. We came from 1,050 and we went up to 1,700, so that's a 60% move. And thinking about it, we had been rising from, especially from 2018 here in August, we had been rising going into this stock market meltdown, this crisis that was going to happen sometime anyway. And we're now at this point in time here where it's really about cashing in your insurance. If gold is seen as a means of insuring your risk, then when the risk manifests itself, that's kind of when you want to cash it in. And it's also like trading at a premium going into this event. And people who then are seeking the safety, who are late, to the party, late to jump in and sign the insurance policy, they usually pay, they pay up for getting the insurance when it's already too late. And so what we're seeing now is that the people who had been buying going into this, especially in this $1,500 to $1,600 gold level, they're kind of getting creamed here. They're getting sold into, and the price is just collapsing. So yeah, that's kind of basically how I see it. I think in terms of looking forward, we can look back to 2011 when we had, I think the US had its AAA rating downgraded to a AA rating or something like that, and that kind of got the gold price up to like 1900 was the news narrative, and then it came right back down a couple of weeks later to 1500, and then it bounced up here for 1 year, and then it went back down into a bear market for a couple of years and bottomed out here. And this is kind of probably what we're going to see here. Is my opinion is that we will see maybe after this decline here, maybe we'll go down a little bit more, but we'll form a bear flag. We'll get some people thinking that this is the bottom, good time to average down, and then we'll go further down, and it probably take a couple of weeks, and we'll eventually get down to this 1350 level. Why this level? From 1900 to 1500 is about 20% decline. From 1700, 20% decline is 350 points, takes us to 1350. That's kind of on a technical perspective. That's kind of how I see it. Then, just looking at the chart pattern first now, if we look at it, it kind of feels the same as with the Dow Jones when it kind of had this this Death Star, and then not Death Star, but I'm just calling it like that. This clear sign of it wants to roll over, and then was this like rally of defiance before it ultimately did roll over, and it's kind of the same. It had this big move down, and then it defied that move down, went right back up, and then rolled over completely. And now it's down here. Well, it's not down here yet, but it's kind of what I think it's going to do. And from here, it's going to look like it's going to go straight down, but probably come back up to 1500, and we'll be then in this trading range for a while. And probably, I think 1 year later, as things stabilize maybe in the stock market and the overall economy and everything with the virus, maybe things get better, then the gold price could go back down to to a lower level. And if we take this decline here from 1900 to 1000, that's about a 50% decline. That could take us to a target of 850 over the long term, assuming like a 4-year time span. 4-year time span, 850. And yeah, that's kind of how I see it going. People, of course, now worried that the Federal Reserve is going to print money and the government's going to give out money to fight the virus, and it's going to be inflationary and all this nonsense. But we will see about that. Taking some examples, two stocks. This one, B2 Gold, is one of the better ones, but I'm not like on top of the valuation. It was, was too many mines to look at, and I was just not interested to look at it in a complete sense. But when the gold price broke out back in July, above this 1350, this one was already rallying. Of course, it came back down and it rallied from the $3 range. I'd say it went all the way up to almost $5 a share. Then it started going down, and now it's at 275. And if you think about it, we're at $1,500 gold, same as in July. But the stock, even though here it was around 3, is now at 275. So intuitively, you'd say during these few quarters here, they were making money at higher gold price, so the stock price should be higher than this 275, but it's not. And therefore, you'd logically imply that it's undervalued at this point in time. But if the gold price keeps going lower, then this will stay undervalued. It might have a pop back to 3. I mean, most likely it will have a pop back to 3. Who knows? And then it will just continue going down if the gold price goes into the toilet. But there is always this possibility that during these swings up during 1 year time, this 1 year time frame, it's always possible that the stock actually manages to make a new high or regain the old high. I've seen that happen in other stocks, not necessarily in the gold market for now, but in other sectors. Then Zimafu Inc. I'm going to talk about that in a second, but first I just want to go through some fundamental numbers for B2 Gold I have on the screen here. So basically their all-in sustaining costs across the board is about $882 an ounce. They've been improving that over, I don't know, quite some time. But basically you can see how $1,700 gold does not really feel like it's necessary for these gold mining companies to make a good amount of money. Looking at Zimafu next, it's a different story. I looked at them back in 2018 and I unfortunately didn't buy them, and it had a nice big run up here to July 2019, and then coming down here it had some issue, mainly centered around some rebels ambushing and killing a bunch of their employees who were transporting the ore to the processing plant or refinery or whatever it's called, and that kind of took the stock into this zone here. Basically they shut down the mine, one of their mines, and they said that until the security situation improves they will not return to mining that ore body. So stock went into the toilet. The analysts, of course, or the traders, the investors, marked down that mine's value, reduced the valuation by 50% to reflect a 50-50 chance that they will never get back into production, or that they actually will get back into production and it will regain its former highs that it had earlier. So I was looking at this back in the time, and I figured that once they announced that the mine's restarting, that will get a pop. And according to the management discussion analysis, they mentioned that according to their debt covenants they had to get back into production in the first quarter, and that news came out in the first quarter. I can't remember exactly where it was, but it came out around here in early February, I think, and that kind of gave me a chance to sell into the strength and make some money, which was cool. But now it's going down again, and I unfortunately bought back some, not as much as I had built up when we were going into this news pump. I bought at 260, I bought some and at 230, and now it's at 190. So I'm still overall in the green with it, but I've obviously not timed this very well, because my evaluation kind of indicates that it should be, it should be higher than this. It should be in the 2s, at bare minimum at 1350 gold, and it's below that. Now looking at the year-end review, they have this they had this press release here. If we look at them, we can see here for 2019 they said their all-in sustaining cost was $724 an ounce. Then they plan to restart this Bangu plant, the one where they had the rebels kill their employees, and this kind of was the news that came out. They're going to restart an initial 3-month production of this amount of gold at all-in sustaining cost of this much. So ultimately, when they announced that they were restarting it, they were just doing what they needed to do to not breach the debt covenant, so that they probably wouldn't have to repay the loan or whatever the penalties would be. And essentially that means they have not fully restarted. They're not mining, they're just processing from stockpile. Then you have down here phase 2, what they plan to do going to Q4, restart production, and their all-in sustaining costs are estimated between 745 and 795. So you can see in terms of the gold price can go lower, much lower, and companies like this will still have positive valuation. So this is probably like something to think about going into Q3, Q4. Position myself for when they restart the mine. Hopefully they do. Hopefully they don't say that they're not going to do it, because security is still not good. And that's basically what it comes down to, is with these kind of companies, and understanding that the valuation is tied to the gold price, and the investor sentiment will dictate whether they trade at a premium or at a discount to their net present value. And yeah, that's kind of, I guess, all I have to say. So just my thoughts. If you want to leave comments, questions and opinions, maybe you disagree with my thinking of us going to 850 over the next 4 years. Of course things can change in the meantime. I mean, this is just my current view. I mean, we could snap up and go to 2000 like some people say, but I just think that this makes sense to me, that we can't go there if gold becomes uninteresting to investors. I mean, there's always a bull market somewhere, so if this goes into a bear market again, then investors will lose interest and they'll go somewhere else with their money, and this will just fizzle down and die. Yeah, so just remember one thing, it's never investment advice. Of course I do give my opinion here, and I might be right and I might be wrong, but you should never risk your money based on someone saying something on YouTube. I've seen other people promote stuff on YouTube, and even when they mean well and they're giving their honest opinion and they're invested in what they say, they can still lose a ton of money being wrong. And if you are in there with them, then you go down with them, and that's just kind of how the way the thing is, But yeah, so that's going to be that. If you like the content, don't forget to subscribe, and have a good day.